Welcome to Redeye, everyone, and this live Q with Formpipe. My name is Fredrik Nilsson, and I'm an equity analyst at the Redeye, and I will be back later for a Q&A session. But now I'll leave over to Christian Sundin, the CEO of Formpipe.
Okay. Are we good? Okay. Thank you, Fredrik. Hi again. Welcome, everyone. I'm, as Fredrik said, Christian Sundin, the CEO of Formpipe. This session, we will purely focus on the Q1 report that we published earlier this morning. For those of you out there that is not that familiar to Formpipe, please reach out to me and we'll schedule a separate session on introducing you to Formpipe and our going forward strategy and those sort of things. So we will only focus on the numbers and the execution of our strategy for the Q1 numbers for this session. Starting with numbers. We see an improved revenue mix coming this quarter compared to the comparison quarter from last year. We see our recurring revenue is now up to 65% of our total revenue, while it was 59% a year ago. We see a year-on-year growth of recurring revenue of 9%. And it's both software as a service, Saas, and support and maintenance that is contributing to the growth of recurring revenue. We also see that the non-recurring revenue, traditional license and deliveries, are down by 7 million, or 17% from last year. Summing up, in total, the revenues are down by 1.5 million Swedish compared to last year's Q1. However, as clearly stated here, with a stronger revenue mix, and we've been having a focus and still have a focus on growing recurring revenue and drive growth through Saas revenue mainly. I will come back to that. I need to make the remark on this. I would probably not have done that if the FX effect would have been in the other direction. But the strengthened Swedish krona compared to a year ago has made the impact of 4 million SEK negative on the turnover, and thereby also the recurring revenue growth would have been even stronger than 9% with a flat currency rate. That goes up and down, and it's of course part of the game. But I think it's important to just that a fact is a fact. That is what it is. We have a natural hedge in our business, so the profitability is not hurt by this, but the growth is hurt by it. Deliveries. One of the non-recurring items we have in our profit and loss statement, we are now considering to be on a floor level. In the middle of Q2 last year, our biggest client, the Danish Landbrugsstyrelsen, substantially lowered the volumes with us. That was due to political aspects, such as the Danish government initiated a cost-saving program on IT consultants early, or actually in late winter last year. When the pandemic hit, that became difficult to mitigate for us and for the customer. And we managed to mitigate it quite well anyway by using our resources, our competencies, and our people to other clients in the grants management vertical. However, with a less predictable and plannable business leading to lower utilization rates than we had before with Landbrugsstyrelsen and the volumes we had on those. Just recently, a little bit less than 2 weeks ago, we announced that we now have signed a new contract, or are about to sign a new contract with Landbrugsstyrelsen on providing us a more stable and plannable business again with this customer that is our largest customer in the group. and that will lead to increased volumes again. But more importantly, when we come to deliveries in general, we have launched a strategy of growing recurring revenue, Saas and so forth, through our partner network and through building things together with our current customer base in the public sector space. We will increase capacity, and we are increasing capacity in order to do that, to drive growth of recurring revenue. But we're doing that by helping the partner network and our customers with more things in terms of delivery as well. So also the delivery revenue will gradually increase from the levels we're having today. So that non-recurring item will grow again from the levels we are. It will grow in order to support the growth of recurring revenue. The other non-recurring item we have in our profit and loss statement, the license, traditional license fees, will continue to trail downwards also in the future. We are successfully ramping up capacity for growth. We have, during this quarter, added another 17 employees to Formpipe, and are ending the quarter on 262 employees. And that, of course, is visible in the profit and loss statement. The successful recruiting we're doing right now, it is impacting our cost base. The other costs are largely in line with last year, but the staff costs are up by 8 million or 15%. The number of employees has gone in this quarter from 245 to 262. Comparing to last year, we were 219 in Q1. So quite a massive increase of capacity in order to drive growth and more sales through our partner network and at our customer base. We can also see that the capitalized development costs are up from last year, and that is mainly due to the intensified focus on growth for Lasernet, the Autoform DM product we got with the acquisition of EFS last summer in combination with Lasernet offering, and the growth path we see there, ramping up the capacity of that product offering. All in all, this leads to that EBIT is actually down by 9 million compared to last year, but completely in line with what we have planned and budgeted for, and is it expected that the investment in further resources, the cost come first, the growth and the revenue will come during the future coming here. So, growth and recurring revenue, I've already mentioned quite a number of times. It's above 60% of our total revenue is recurring revenue. We have grown it for many years with more than 10% a year. It covers 85% of our fixed operating costs, which gives stability and lower risk in our business model. It gives a solid floor in our financial performance, and it increased the resilience for shocks like COVID. And also it's a strong factor why we, in the midst of a pandemic, choose to go for a growth strategy and recruit a lot of and add on cost to our business in these difficult times in the world. That's because we see an opportunity in it, and we see that this is a good time for us to position ourselves for further growth and faster growth going forward. However, the investment in growth is, of course, disrupts the 85% growing coverage of the total with the recurring revenue in comparison to our fixed operating cost. So, as you can see here, it is the curve that has been steadily going upwards, covering more and more of our fixed costs, is now taking a hit downwards. That will come back. It is according to plan and will come back and cover more while we are growing recurring revenue. And since it's a scalable business with recurring revenue, we will bring this back up again. We also see in the market a rapid buildup of Saas, and further to the right you see that the ACV on Saas here alone is more than 5 million for this quarter. And looking on this chart where we've gone with growth of SaaS quarter by quarter since 2017 up to where we are now. The quarter one this year is a very strong quarter compared to the last couple of quarters. So the strong ACV we have is spearheaded by the private sector business area we're having. For the company in total, we have an 11 million ACV for this quarter. We're getting help on the ACV side, actually. Here we're getting help from the FX, since comparison to last year, the Swedish krona is strengthened, but compared to last quarter, it has weakened again, and thereby the ACV on FX gets help in this. But even without FX help, we see a strong quarter on ACV growth, both for SaaS and for support and maintenance. Important to point out here is that the acquisition we made last summer of EFS Technology, a software partner to us that we have been working with for many years. They were selling, when we didn't own EFS, and that was not a part of Formpipe, they were selling Lasernet together with Autoform as traditional license to the bank and finance industry in the most of the cases. Or all the cases were traditional license. We have shifted that business model for all customers in the pipeline of Temenos and bank and finance industry to also be Saas. That means that we have been able to together with Temenos, package this to the customers, so we're selling it as a Saas offering instead of a traditional license. What that means in our numbers is that we in this quarter have closed 2 great bank deals, summing up an ACV of approximately 2 million Swedish together with Temenos as Saas. That has not been any revenue recognition in this quarter. If we would have had the previous business model that EFS had, EFS would have, if we wouldn't have owned that part of the business, would have provided approximately at least 4 million in traditional license sales for us. And that's why I said on the previous slide, the license sales will continue to trail downwards because we now have the entire Temenos partnership within Formpipe. We're pushing Saas. That will no longer become traditional license sales. But this is a positive thing. Of course, this is a positive thing. We are driving recurring revenue and we're driving Saas with this shift of business model to the Temenos channel. And looking on the outgoing ARR, it's 271 million. It was only 235 million last year in Q1. That's quite a hefty growth of ARR over a year, 15% growth of ARR in this. And that is something we should take with us and continue to drive with the strategy we're running. I want to revisit a slide from when I presented the new financial targets for Formpipe. We said 2021 is going to be a year of investment. We are going to invest in growth of organizational capabilities to support our partner network, and we are going to win deals within the Microsoft channel and the Temenos channel. We are going to focus on continued excellent deliveries to both private and public sector customers. And this will mean that we're taking a hit on EBIT in 2021. I just want to point out that we are executing on this strategy, and looking on the ACV numbers, we're proving that this works. We will bring growth of an average of 10% from 2021 to 2025 per year in average. We will drive growth of recurring revenue with the help of increased delivery revenue as well, but the recurring revenue will grow faster, meaning that when we come to 2025, we will be back and above the levels we have on recurring revenue compared to total revenue, even though we might boost with some delivery revenue in the short term in order to drive recurring revenue upwards, because that takes a longer time. The scalability of recurring revenue, we've done this before. We came from low margins, bringing it back with the focus of recurring revenue growth. The scalability of that business model provides better and better margins over time, we will bring back the margins to about 20% in 2025. And we will do this in a cash-generating business, meaning that we will be able to pay dividend to our shareholder exceeding 50% in average over time. I think that sums it up from what I would like to highlight on the Q1 report for now. Thank you.
Thank you, Christian. First, I want to highlight the possibility to ask questions to Christian on our webpage. It's just below the video there. You viewers can ask questions if you like to. But I will start with some of my own questions. As you mentioned, you added 17 employees during the quarter. Are you happy with that pace? And what should we expect for the rest of the year?
Yeah, it's according to plan. It was sort of slow around New Year's and winter with some of the recruitments, but it easing up. We predicted it to be easier to find competent people in the pandemic situation, but we actually stumble into some challenges that people with work or employment are less risk willing to leave their employer in order to move in the pandemic, in the light of the pandemic. But we've come around that now, and we are very happy with the pace for recruiting. It's of course a lot of onboarding, it is training and so forth, and getting people aboard, and it's not simplified a lot by the pandemic, but we've learned to manage very well with digital onboarding and so forth. So we're following plan, and but we will continue to recruit also, but perhaps not 17 per quarter. I think that is a little bit more success. That's a little bit better than what we can expect the coming quarters.
Okay. As you mentioned, the ACV increased relative to last year, and you mentioned a few specific deals. But what about your customers within the banking sector specifically? Are they ready to switch to software as a service?
Yeah, I mean, our partner Temenos, they have a growth strategy built on Saas, and it seems like at least the modern and upcoming banks are willing to go for Saas, and we're sort of, I mean, we're piggybacking to be honest on the success and the growth of Temenos, and we're making Temenos better, and we are very happy with that partnership to tag along on that journey. And since they are able to sell Temenos software as a service, we are able to go along with that and sell Lasernet and Autoform DM to those customers as software as a service.
Okay. So considering what you said about a few banking deals, and there's only been a few quarters since you acquired EFS, are you happy with the development so far?
Oh yes. I mean, even though it's not crystal clear looking on revenue recognition, but the ACV generation and what it provides for future growth, I'm more than happy with the acquisition of EFS and the onboarding and the how well we have integrated. Yeah, I mean, we do not consider it as EFS. It's only in these arenas that we talk about EFS. It's Formpipe, all of it right now, and we're very happy with that and all the competence we've gained.
Okay, now a question from the web. The 17 people recruited during the first quarter, when were they recruited? Was it in the later part of the quarter or earlier?
It's a distribution over all months there. Some people coming in already from the 1st of January, while others has been recruited later in the quarter, and also in all sorts of different geographies, from Sweden to US to UK and Denmark. So it's all over the place.
Okay. Another question from the web. What are the increase in sales expenses during the quarter related to?
Yes. I mean, since the Lasernet business is taking a larger part of our business, and that is driven through the partner network, the COGS will follow that increase since we are using kickbacks to partners to drive sales there. So in the light of the success of Lasernet, this line will trend upwards with the sales, basically.
Okay. I'll continue with another question then. The solid ARR growth in the private sector is probably not a surprise to anyone, but also Denmark has grown at a good pace during the last year. What has driven the ARR growth in Denmark?
Yeah, it's been actually a very successful strategy also in Denmark to get closer to the end customers and also to sell. We're talking about co-creation, but actually, and this is an example of that where the product we previously named Quality Control, now named Adoxa, which helps with getting really good quality of your data in whatever system you're using. And mainly for us on Acadre, the platform we're selling to municipalities in Denmark, but actually competitive repositories and also for central government and so forth, and everything from file share to Outlook and finding GDPR breaches or just getting your data in good order to be able to know that you're acting on the correct information at any time. So the more important data becomes, the more necessary it is to have a good software that makes sure that your data stay in good order and in good quality. And what we've done is that we've sold Adoxa only as a subscription or as an add-on to the recurring revenue to our current client customer base. And you also see a shift there from due to frame agreement where our customers are renewing their maintenance agreement with Acadre, for example. We in some cases include Adoxa in that, and that it becomes maintenance. We have actually reclassified some of the Saas deals on Adoxa to be in the maintenance stream instead, but that's only a shift between lines. But you're referring to the full ARR, which is growing rapidly. That is due to the success of us selling more to current customers, more users, more modules such as Adoxa, more processes, and thereby increasing the part at each of our customers. And we're doing the same strategy in Sweden at the moment. So.
Okay, so talking about Sweden, could you elaborate a bit about that strategy and when do you expect it will pay off in terms of growth as it has in Denmark?
Well, I mean, we are recruiting to get closer to the customers and to upsell to the current customer base, but of course also be there on new tenders to the public sector space of Sweden. But working closer to the end customer provides the possibility to upsell and also co-create. And co-creation is a big topic in public sector, both in Denmark and Sweden at the moment, where several customers go together and they want something that they see a challenge in their digitalization journey. We who have the platform and have the skills and competence around IT, we see a possibility of helping customers with that challenge by building a product and then upselling to the entire customer base. But that requires us being closer to the end customers, and that is what we're staffing up and gearing up to be, and thereby grow the ACV and the recurring revenue at that customer base.
Okay. What about M&A activity? Are there any ongoing dialogues?
Well, if it were, I would probably not disclose it. I mean, I can't really comment. We are continuously looking for add-on bolt-on acquisitions. We have two acquisition strategies. One is to add more customers, to do the same we're doing in Denmark and Sweden on public sector space, to see if we can consolidate Europe actually in terms of digitalization of the public sectors. While the other one is to look for add-on software to the Microsoft Dynamics and Temenos product offerings that are similar to Lasernet or are sold in a similar way through a partner channel as Lasernet and Autoform. And we're keeping our eyes open for those, and we're screening the market for those sort of objects continuously. But whether or not is we have, I could not disclose if we're close or not. But there's always ongoing discussions and work with it. So.
Okay. Once again, I want to highlight the opportunity for you to ask questions to Christian, and I will go on with my own questions in the meantime. In terms of product development, are there any specific areas where you're focusing currently?
Well, of course, cloudification and make deployment, installation, implementation of our software easier for our partner network in the cloud is, of course, top priority, to make it smoother, simpler, more robust, and thereby easier to onboard more partners, and for the current partners, easier to have short ROIs on the implementation of our software out at the end customers. Those are top priorities in product development.
Okay. So talking about the partners, are there anything other except for the things that you just mentioned that they want in order to be able to provide an even better partner network for you?
Well, I think we are acting on what the partner network, they want a thorough support and be able to always rely on that we are able to step up if they run into a bump during the project and so forth, so that they can focus on implementing Temenos and Dynamics, and we help them with making sure that Lasernet is very easy and actually helping them to be more cost effective and competitive in their offerings. I think that is the main key for us to help our partners. But that requires everything from tech pre-sale help to support to helping managing the right resources and so forth. So it's all over the line that we need to help out in the partner channel, and that's why we're ramping up our capacity to do that in order to win more deals with our partners.
Okay, so during 2020, you saw some issues in the Swedish and Danish public sectors due to the corona crisis. The private sector was strong, and judging the numbers in this quarter, it seems like that's still the case. But what about the public sectors? Are you seeing any improvement, or are they still a little bit cautious?
Well, we see that there's quite hefty price competition in the tenders. We won quite a number of them, actually, but both in Denmark and Sweden. But it is really competitive prices, and the strategy we're having is, of course, that we will win, and then we will see if we can grow with those customers when we have the customer base with the co-creation initiatives that I mentioned, working closer to the customer and upsell. So we definitely see a growth path for both public sector business areas we're having, not at the same percentage numbers as we see the possibilities in private sector, but it will be stable, good growth in both public sector Sweden and Denmark going forward.
Okay. That was all from me. Thanks a lot, Christian and Joakim.
Thanks everyone.